It was another rough day on Wall Street, with all three major averages ending the week in the red. All of them lost around 2% Friday. The Dow plunged 572 points, the Nasdaq dropped 161 points, and the S&P 500 lost 58. After a lackluster March jobs report and mounting fears of an all-out trade war with China. Scott Gamm is a correspondent for TheStreet.com, and he joins us now. Scott, great to have you here. The president said that there could be some short-term pain before things get better. Can we expect to see something like that? Is this the beginning of volatility that will eventually figure itself out?
Yeah, I think volatility is back. It's here to stay. Remember, 2017 was sort of the lowest levels of volatility we had seen in 50 years. Stocks were on autopilot, and now it's much more of that trading environment. You know, we started the week down 400 points in the Dow on Monday. Then the following 2 days we were up, a few hundred points, and now we're back down. So for the week, we're only down in the Dow less than 1%.
Right.
So not a huge decline, but certainly investors are worried about the rhetoric that we're hearing right now.
Sure, and we know that markets don't like uncertainty, right? And this does seem to be very uncertain. Will these tariffs be enacted? Will they not be enacted? Will China retaliate? Let's say the tariffs are enacted, correct? Who stands to be the big winners and the big losers?
Well, I think that remains to be seen. I think the big worry, though, is for stocks like Boeing, right? I mean, will Boeing be able to sell aircraft to China? Will China slap tariffs on Starbucks coffee in China? Will China make FedEx planes sit on the tarmac in China? I mean, these are all questions that are going through the minds of investors, and I think there's this sort of risk-off type of environment right now where investors are saying, listen, I don't want my money in any of these stocks right now. I'm just going to raise cash, sit in the sidelines, and wait for stocks to come down and get in at a discount.
So you think they're just waiting for buying opportunities?
Well, listen, I mean, there are inefficiencies in the markets, right? I mean, the markets don't price in everything, and that's when you get to make money. Because, people had trouble making money in 2017 if they weren't in the markets, because there were very few good entry points in 2017. And now, as we start to see some of the air deflate, you're allowing investors to come in.
Yes, but you have to allow for the possibility that if there is a full-fledged trade war, things could get a lot worse before they get better.
Right. And look, I don't think we're in a trade war yet. We had Treasury Secretary Steve Mnuchin.
No, I agree. But it could, there's the possibility exists.
And I think that's what the markets are pricing in right now. Markets, of course, are a forward-looking indicator.
Absolutely. Now, it certainly has not been an easy week for Larry Kudlow, his first week on the job as the president's chief economic advisor. He did say, though, he's remaining optimistic. We have a soundbite of his we want to play.
This is being done in the name of growing the American economy at a much faster rate than in previous decades. It's part of the whole package of lower taxation and regulations. Trade world, you got to play by the rules. And if you change this, if China comes on board and joins the rest of the world, right? If they do that, everyone will benefit.
Now, Kudlow has historically been against tariffs, so how is he navigating his new role?
Well, look, I think the focus right now is on China, and I think perhaps a condition for Kudlow taking the job was for him to necessarily, support the president on this China issue.
I'm sure they discussed it.
Yeah, I would imagine that came up.
Yeah.
But, this is a complex issue, right? We have a $500 billion trade deficit with China. They've been dumping steel and decimating our steel and aluminum industries. So I think the president wants China to come to the table and start negotiating with him. Will these tariffs be enacted? Who knows? It could be all bluff.
Right.
And the other thing to consider is, from a market's point of view, I think the market can handle a $50 billion or $100 billion tariff program. I mean, the stock market's worth $30 trillion.
Sure. But another thing I guess that the stock market was reacting to today was the March jobs report. 103,000 jobs were added, which is lower than expectations. How significant do you think that is?
Well, I think weather played a role in why those jobs numbers were a little bit weaker than expected. But keep in mind, wage growth was 2.7% year over year. The markets actually don't want to see so much wage growth, because if we get to see wage growth, it means the economy is moving a little bit faster than we thought, and it might cause the Federal Reserve to raise interest rates faster. And we know the markets don't want that many Fed rate hikes this year. So the fact that we saw a little bit weaker than expected wage growth, I think gave a lot of investors some relief that the Fed is going to maintain their forecast for this year of 3 rate hikes and not bump it up to 4.
Scott Gamm from TheStreet.com. It's been a pleasure. Thanks for coming to see us.
Great to see you. Thanks, Tanya.